Good morning, everybody. Good morning. Hope everybody's doing well. Good morning. Good morning, everybody. Hope everybody's doing well, staying warm, wherever you're at in the country. All right, I'll let everybody file in here just another minute, then we'll get going. Good morning, DM. Good morning, Bush Dad. Again, hope everybody's staying safe and well. I live in Tennessee, so they got hit pretty hard. Luckily, we were kind of in a warm sector and didn't get too much, but I know a lot of people don't have power, so. Good morning, Will. All right, let's go ahead and jump right into it. Thanks, everybody, for joining us this morning. This is Michael coming to you from Game Edge on Monday, January 26th, with our pre-market prep session. As always, we'll cover those three pillars, and then we'll do some individual equities. If you have those, you can throw those in the chat. We'll look at those at the end. So go ahead and jump right into our trend portion of our three pillars. Obviously, the market trend model based on the tick index, bolded white line is your intraday instantaneous cumulative tick. And you want this to be above the shorter term railroad track moving averages. We saw a move back to the upside from testing the colored ribbon. We talked about that. Our colored ribbon, red above cyan, as long as the CT is above that, our mechanical portfolios are turned on. So our P-Trans to peak X as well as our wheel strategy is turned on today. So we'll be entering positions and putting capital to work. We'd like to see this completely start to recover, and then these road track, what we call moving averages, start stacking in the proper order and moving to the upside with a positive slope from lower left to upper right, or like we did over here. That'd be indicating obviously more buyers than sellers in the overall market. So as of now, long-term trend is still intact. Short-term trend, we could be at another inflection point, kind of sideways here. We'd like to see that continue to move to the upside. Moving on to our trading view market trend model. Again, you see that we're below. These are shorter term, obviously, and more sensitive. The tick US down here versus the ARCX. And you can see how we're interacting with those shorter term railroad track moving averages. Obviously, you want to see this green line continue to go up above those moving averages, and these moving averages cross back to the upside. We do have alerts on these moving averages when they start crossing to the downside or to the upside in trading view. And again, our tick US, which is a sensitive area here, we'd like to see this cross back up and these moving averages stack in the proper order. So if you want this code for the trading view market trend model, you can come join us in our Discord. It's all there and provided. And we have an update actually over the weekend that had some other key tools to the market trend model. All right, let's move on. The SPX, largest, most notional value options complex that we look at for positioning of market participants. This is the SPXA. This is our cruise ships or our tankers that steer from a 40,000 foot view. This is obviously the February expiry in our web app. We are call dominated above below spot price. You see the transition areas that will be important areas to stay above 6,900. Obviously, that round Livermore level, as well as the bottom of the DEX transition there. And then this side, obviously, if we move up towards that area today, that could be an area of interaction that we'll watch on the SPXA. Again, this money does not, these contracts don't turn over as rapidly. So this money and positioning is fairly well entrenched. You see COI still up there at 7,000 into February expiry. So market participants are speculating all the way up towards 7,000. All right, moving on the SPXP, these are our speed boats. These control the price basically on a 0 DT as well as a weekly basis. And you see the upper quartile turned on via our interactive web app over here, 76% of the total OI. is expiring this week through Monday through Wednesday, and then obviously into Friday. But we are call dominated. You can see where GEX and DEX transition overlap to the bottom at the index, and then P-trans area at 69.10 and then 69.15. So those will be areas that we need to stay above or get above. And then we see 69.50 to the upside, a large number there where market participants are speculating via the upper quartile, and then 7,000 is PGEX and COI. So we're still seeing the speculation up towards 7,000. That would be that area that we'd anticipate that market participants would look for price to move up towards if we get above 69.50. And then obviously staying above the transitions keeps us in a more call dominated positive gamma favorable environment for move to the upside, as well as supportive price action. All right, moving on, the SPXP GEX ratio. Again, this is like a put call ratio, but we add gamma, which is a time component. So it's weighted to the short dated call versus put gamma. SPXP is basically sideways, dojis the past 2 days after the large rebound to the upside. We do see a negative slope, though, in that GEX ratio. So this is indicating that the short dated put gamma is overriding the short dated call gamma. We're above the 1 level, so we're at the 1.09. So again, that means call speculators are in control just by a hair. So we'll give an edge to the bulls there as long as we stay above the 1 level. But if the SPXP price starts moving to the upside, we need to see the GEX ratio in confluence and moving to the upside, indicating short dated out of the money call speculation is coming into the overall complex. Moving on, the SPXP delta balance. So we've seen this improve now. This is separating the two planes of the structure. That's above spot price and below spot price. So this is the right-hand plane, the green dotted line. The left-hand plane is the red dotted line. And then the delta balance here is the aggregate of the two. And then again, the projection on out in time, this would be the 27th. So obviously that would be Tuesday through Wednesday, and then on into the rest of the week. Could be possibly looking for some weakness into the 29th and 30th, which would be the end, but we see a rebound into Friday. So again, maybe some short-term weakness into Thursday. Last week, towards the middle of the end of the week, this was looking a little bit weaker, but we've actually repaired the structure now. So positive slope in the right-hand plane. We'd like to see this move above 0. That would put the bulls in control. Left-hand plane entrenched in the money calls, so those will continue to be supportive. And we're dragging the delta balance back to the upside. So again, we'll watch for the midweek weakness towards possibly Thursday, but then a rebound into Friday, and then Tuesday into Wednesday looks fairly strong. We'd like to get this left-hand plane back above 0 also, so we'll continue to watch that. All right, let's move on to the net stack command. Again, high sensitivity levels for day. Important developments for today is left-hand plane, right-hand plane integral. We were in the money calls in the left-hand plane, in the money puts in the right-hand plane. That's a locked horns condition, which will be difficult for a price to move above 69.25. But you see this transition area here from in the money puts to out of the money calls at 69.14. So if we get above 69.14, bulls will have an edge, and this will be call dominated delta. So that could push us up towards that 69.25 strike. If we get above 69.25, which is top of the drunken sailor range, then we could move up towards the 69.50 level. Again, charm, you see that headwind at 7,000. We're not going up there today and not getting above that. Again, extremely difficult to get above that. You see where out of the money calls become in the money puts at 68.60. So that's why I talked about 68.50, and then we'd have some problems probably moving above 68.50. Net gamma, high sensitivity areas where we can cross 69.25. Again, that could drive us up towards 69.50 and to the downside 68.90. And you see Vanna actually winning the battle to the upside. So if we see a drop in volatility, as well as out of the money calls coming into the complex, we'll have a Vanna tailwind that'll drive us up obviously towards that 68.50 level. And that'd be an area to look for some stalling and possible reaction of price. All right, moving on, the SPXP 0 DTE. For today, we're call dominated above and below spot price. The drunken sailor range is 68.90 towards 69.25. That'd be the area I'd be looking for stalling right out of the gate. If we get above that, then we'd give an edge to the bulls for a push up towards 69.50. Transition area is going to be extremely important. We're testing that pre-market, 69.10, 69.15, overlap and confluence of the P-trans level. So above that, we have a more favorable environment towards 69.25 and again towards 69.50. Below transition areas, obviously towards 68.90, 6900 is a key little more round level where we have stacked deltas there. So that'll be important for us to stay above, and we would look for that to be stabilizing and supportive within the overall structure. So as always, this is presented by GameEdge.us. Come join us, newsletter. Put your email in. You'll be delivered the Beyond the Bell newsletter over the weekend, free towards your inbox. And then the free courses, Game Edge Fast Pass, again, flagship options course, put it in your email and you'll be delivered that, as well as our other courses. And then, as always, come join us at the pricing tab into our Discord, extensive trading community with education, as well as traders from all experiences helping traders get up to speed and use our tools very rapidly. So, all right, let's look at some individual equities. I see a few posted there. Thanks, Consistency Spike. Checkpoint. So Checkpoint does not have enough OI for us to look at via our dealer metric controls or our web app. So OI needs to be above 100,000 just as a volumetric standpoint. So I'll look at ERIE. Again, doesn't have enough OI for us to check on that also. So again, the reason we do that is we want to make sure that the dealer hedging metrics are in control and we can see an overall structure that gives us an informed decision. If the OI is not above 100,000, then we can't really make a informed decision or trading plan. All right, Meta. Heading into Friday, call dominated above below spot price. You see just green net deltas up and down. Made. I'm not sure what made is. KGB, BK. Up and down, just structure looks great. So staying above transition will be important, but everything looks good. 670 to the upside there. Let's see what the next expiry looks like. Moves up towards 700 PGX. Structure looks great on Meta. So pullback supportive and speculation to the upside. INTC. Okay. INTC put dominated heading into this Friday. You're below the transition, so that's weak. I'd look for supportive type action down towards 42 and 40. After this expiry, we're call dominated. So structure improves after this. Everything looks good there for a possible upside towards 50 on that. Let's look at the top quartiles. Call dominated, top quartiles up towards 50, still speculation. Everything looks good on INTC, even the pullback supportive. Obviously I know they had earnings, but INTC still looks good. All right, Hood, call dominated, above and below spot price. You're below transition though on Hood. Let's look at the next expiry. Put dominated then on Hood. That does not look the greatest. All the top quartile expiries there, call dominated. You're below transition though. So I'd look for supportive at 100. You need to get above transition though on Hood though. So, and you see the significant charm overhead. That's going to be a headwind. So not necessarily one of the first stocks I go to. Microsoft, call dominated, above transition, pull back to 460 would look good, even though that's PGX, so you're way above PGX. At the top of transition there, PGX 510, call dominated on Microsoft. Upside looks good on Microsoft. You'll just have a little bit of a headwind, though, getting across these strikes here at 80 and 85. But everything looks good on Microsoft. GV, let's look at that one. Let's look at the quartiles. Call dominated on GV. You're within the transition there, though. Let's look at this for Friday. Call dominated, 700 to the upside. Everything looks good on GV. Just traversing to the upside towards 680. But call speculation looks good on GV. Absolutely, DM. It just looks weak. It's not one of the first ones I'd go to. So WDC, top quartile. I'm going to assume it looks good. Call dominated. WDC looks great. Above transition, supportive there. Only 16,000 OI, though, for this Friday's expiry. So a little bit of lower OI. But everything looks good. Call dominated, 250, 250. Everything looks good on WDC. Nothing there. CLS. Call dominated for this Friday. Looks good. 310 to the upside is where PGX is at. Next expiry actually changed to put dominated, though, and transition changes to the downside. Let's look at the quartiles. Call dominated. 310 to the upside is where I'd be looking for CLS speculation. But that transition to a little bit weaker after this Friday would be my only concern on that one. Let's get Qualcomm. Oops. Seg, Harn Dog. Okay, this Friday, put dominated on Seg. That does not look good. Put dominated there does not look good. And put dominated in the whole structure, even though we have PGX to the upside, you're at the bottom of transition, significant overhead headwind via all these in the money puts overhead. That's why we're put dominated. Qualcomm, not looking good. Seg. Okay, let's look at Seg this Friday. put dominated, below transition looks very weak. You actually have PGX below, or you're actually below PGX. That looks extremely weak. Very weak there. Put dominated 300. You're below PGX. Arndog, that looks terrible. Hopefully you're short. Put dominate on the quartiles, below transition. Yeah, that looks so 280 COTMP. So maybe looks for some stalling around there if you're short, but seg looks fairly weak. So, all right. Let's jump over to our trading view chart. Let's see where we're at pre-market. So we're above GEX and DEX, and we're testing the top of DS at 69.25 already pre-market. So there we go. Already moved to the upside. So 69.25 is going to be your stalling level. Look for a pullback to GEX and DEX transition. Hopefully that'll be supportive. But yeah, movement already pre-market. CLV is just off the chart, or SLV is just off the charts, Mosey. I mean, it's just craziness. Call dominated. Yeah, just nothing to say here. I mean, just significant move to the upside. I don't even know what it is pre-market now, but just massive move to the upside on SLV. So I said CLV, SLV, but we're hitting 100, so could see some stalling into that overhead area. That's where PGX is at, and then 28th, same, 30th, same. So structure doesn't advance much. So I would look for some stalling probably into this overhead area at 100. But yeah, SLV just a huge move to the upside. So. All right, thanks everybody for joining us. Like and subscribe on X and YouTube. You'll be notified when we go live. Again, watch that 69.25 area overhead. That's top of DS. And then as long as we're above GEX and DEX transition, should be supportive. We're call dominated today, so I'd look for supportive type action on pullbacks. You see SPY testing 690 P-trans, 623 P-trans on QQQ, testing all of those pre-market there. So those will be key areas to try to get above. So, all right, thanks everybody for joining us. Everybody have a great day and manage risk as always. See you.